In a world dominated by financial news, daily stock fluctuations, and macroeconomic updates, it is easy to feel overwhelmed by the complexity of the global market. Whether you are an employee, an investor, or a business owner, you have likely wondered if dedicating your time to understanding and analyzing market forces is actually worth it. Many people view market analysis as a highly specialized activity reserved for Wall Street professionals, while others see it as a volatile arena driven by speculation. The reality is that the market is a massive, decentralized information processor that coordinates human activity on a global scale. In this video, we will explore the practical value of market literacy. We will break down how price signals convey information, how market understanding protects your wealth and guides capital allocation, and how to avoid the psychological traps of short-term speculation. To decide if market analysis is worth your time, you must first understand the market as a mechanism for processing information. At any given moment, millions of buyers and sellers are negotiating the value of goods, services, and financial assets across the globe. The result of these negotiations is a single, clean metric: the price. Prices are not arbitrary numbers set by corporate committees. They are complex signals that reflect the aggregate expectations of all market participants regarding supply, demand, scarcity, and future risk. By learning to read these price signals, you can gain a realistic understanding of economic conditions before they are reflected in official government statistics. Furthermore, price signals coordinate resources across the economy. When the price of a resource rises, it signals to manufacturers to find alternatives, to suppliers to increase production, and to consumers to economize. This decentralized coordination is known as the price mechanism. Without this mechanism, managing supply chains or pricing services would require central planning, which has historically failed to allocate resources efficiently. Understanding how prices respond to changes in interest rates, labor availability, and energy costs allows you to anticipate shifts in your industry and adjust your pricing strategy accordingly. As a result of this market literacy, you develop a strong appreciation for supply and demand dynamics. You learn to recognize how market structures, such as monopolies or highly competitive markets, influence pricing power and consumer options. This analytical lens helps you evaluate the viability of business models and career paths. By understanding where a company sits in its industry's competitive landscape, you can assess its long-term viability and make more rational decisions about where to invest your capital or build your career. Beyond theoretical understanding, market analysis offers direct utility for wealth building and capital preservation. In a modern economy, keeping your savings entirely in cash exposes you to the silent erosion of purchasing power caused by inflation. To maintain and grow your wealth, you must allocate capital to productive assets, such as stocks, real estate, or business ventures. Understanding how different asset classes perform during different phases of the economic cycle is essential to constructing a resilient investment portfolio. Market literacy helps you evaluate risk-adjusted returns and make asset allocation decisions based on data rather than emotion. Furthermore, understanding markets improves capital allocation inside businesses. If you are an entrepreneur or executive, you must decide where to reinvest company profits. Should you expand production, hire more staff, buy back stock, or acquire a competitor? These decisions require analyzing capital markets to understand the cost of debt, the cost of equity, and the expected returns of different initiatives. By mastering these concepts, you can optimize your company's capital structure and ensure that every dollar spent generates maximum long-term value for stakeholders. Additionally, market literacy protects you from economic policy shifts. When central banks adjust interest rates or governments implement fiscal stimulus, these policies create ripple effects throughout the market, altering the cost of borrowing and the value of financial assets. By tracking these policy changes, you can adjust your debt structure, refinance loans, or reposition your investments to minimize risk. This proactive financial management ensures that your household or business remains stable during periods of macroeconomic volatility. Finally, deciding if market analysis is worth your time requires recognizing the substantial risks, psychological traps, and cognitive biases associated with trading. A major risk is confusing long-term investing with short-term speculation. Financial media often prioritizes short-term market noise, creating a sense of urgency that encourages active trading. However, historical data consistently shows that frequent trading reduces investment returns due to transaction costs, taxes, and emotional decision-making. If you enter the market expecting rapid wealth accumulation or attempting to time short-term price movements, you will likely face significant losses. To avoid these traps, you must manage specific cognitive biases. The most common is loss aversion, which is the tendency to feel the pain of a financial loss far more intensely than the pleasure of an equivalent gain. This bias often leads investors to sell winning assets too early to lock in profits, while holding on to losing assets for too long in the hope of breaking even. Another trap is confirmation bias, where you seek out information that supports your existing investment thesis while ignoring evidence that contradicts it. Recognizing these psychological barriers is essential to maintaining discipline in the face of market volatility. For individuals looking to build their market literacy, a clear starting checklist can help. First, focus on understanding the distinction between fundamental analysis, which evaluates an asset's underlying value, and technical analysis, which studies historical price patterns. Second, prioritize low-cost, diversified index funds as the baseline of your investment strategy, minimizing the need to pick individual stocks. Third, establish a long-term investment horizon to allow compound interest to work in your favor, reducing the impact of short-term volatility. Understanding both the information value of prices and the psychological limits of trading is the key to navigating the global market. Market Map Explained breaks down the forces behind industries, companies, prices, and economic shifts. We turn complicated market stories into clear visual explanations, showing how incentives, competition, regulation, and technology shape the world around you. This video is general business and economics education, not financial, investment, or legal advice. Economic models are simplified for illustration purposes.